Welcome back to all our listeners for another episode with Gold for a New Generation. This is our sixth episode. Today is January 7th, 2021. And today's episode is titled Gold versus Bitcoin. So let's talk a little bit about what's been happening over in the world since we had our last episode. So as of yesterday, the Democrats have basically gotten a full sweep and won every category of the election, with the last category being the Senate, where it's now 50-50 between the Democrats and the Republicans. And in one of our previous videos, we spoke about what the election means for gold and potential scenarios of the election and outcomes based on those scenarios. If you go back to that video, you see that we spoke if there was going to be a full Democratic sweep, the potential outcomes could be aggressive stimulus, could be potential increases in taxes, and usually that has certain outcomes, like for example high inflation. So yeah, we're definitely going to talk a little bit about that. I also want to talk about Bitcoin and give you a little bit of a background about Bitcoin. Bitcoin started trading on markets back in July 2010, so it's very young. Back then, it was 8% of 1 cent, so $0.0008. And today it's trading close to $40,000, and that's American. And a little more about Bitcoin's life. In the middle of those 10 years, we've seen Bitcoin rally up in 2017 and getting close to $20,000 and then dropping back to $3,000. So that was a small bubble compared to, just a small bubble back then. And then I think in the beginning of September 2020, we started seeing Bitcoin rallying up again from about $10,000 USD to today actually reaching $40,000 for the first time, 4 times its value in 4 months. Pretty incredible. Meanwhile, talking about gold, gold hit its all-time high, peaking at around $2,060 back in August 2020. And then just as Bitcoin started to rallying up, you could see that gold kind of calmed down, it dropped, it came back up, and today is trading around $1,911 approximately. So today what we're going to talk about is gold versus Bitcoin in a way where they're both competing for the safe haven title, which traditionally went to gold, but gold had never competed with Bitcoin before because Bitcoin didn't exist in a poor economic times before. So if you want to learn more about Bitcoin, you should definitely hit 99bitcoins.com. We're not going to there's so much to learn about Bitcoin, so many interesting things. We're not going to get too deep into that. Overall, Steve, what are your thoughts about what's going on politically, Bitcoin and gold?
Yeah, so it's it's really interesting. As you mentioned, we did talk about it on a previous podcast that the Democrats now have a full sweep. Maybe it's a little bit tenuous in the Senate, but for the most part, they can control U.S. policy for the next 2 years, and it's likely going to mean lots of stimulus, which could lead to inflation. It's potentially going to mean higher taxes, which higher capital gains taxes could lead to people trying to, crystallize their gains now before they have to pay a higher tax rate in the future, and that could lead to some sort of selling event. The third thing that we didn't talk about in our previous podcast, but it's really interesting, is interest rates have started to creep up in the last few days. And it's not a lot. If you look at the US 10-year interest rate, it's gone up about 0.15, 0.2%. But it's very interesting that, when we started this podcast, the whole idea was, people are so focused on stocks and bonds that have really benefited from interest rates going down. If interest rates start to go up, stocks and bonds could get hit pretty hard, and that's why you want to start taking a small portion of your portfolio and diversifying, whether that's gold or Bitcoin. We'll discuss that today. But I think that's one thing that I'm just not hearing people really talk about in the financial world these last 3 days. There's been a lot to talk about in the last little while. The Dems have won, and there's all sorts of things going on in the U.S. But it's very interesting that interest rates, they were kind of trading in a narrow little range, and now they've kind of jumped out of that. And if this is the turning point for interest rates, that could have, enormous ramifications. We've in the Western world, we've benefited enormously from interest rates going down for over almost 40 years. It used to be we get a mortgage at 18%, 19%. A lot of people have never experienced that before. I bought my first Canada savings bond as an 8-year-old at 19.5%. I don't know if we're going back there, but if interest rates start increasing, whether it's concerns about, hey, Democrats are going to do a lot of stimulus, and that's going to, cause more inflation, and people are getting worried about that. We'll see how it all shakes out. But I think that's a force, and it's to me, it's an event that's putting more emphasis on looking at diversifying a portfolio. Lots of cross currents here. I don't think we can make like a perfect prediction, but definitely, I think rising interest rates could be the wild card here in the near future and in the medium term. So that's something that our listeners probably aren't necessarily hearing, and I would just emphasize that this could be the moment. We'll see, but it's very interesting.
Interest rates are a huge factor of helping control inflation. Is there a reason why? Is that why interest rates could start to go up?
Yeah,
Because
and that's yeah, that's
they're
that. And
scared of high inflation.
yes, I mean it's hard to always pinpoint a
Yeah.
precise narrative on any sort of market move. That's all the talking heads always want to give that simple story and say this is why it's causing it. But definitely that's a factor that you know uh, some large investors start getting a little more worried about inflation, and they go, okay, well, I want to be careful about owning anything that has a fixed interest rate on it, and that creates less demand um, for bonds, and that as bond prices go down, that means interest rates are going up. So that definitely could be a factor. All I can kind of see is, I can see interest rates are starting to creep up, and just keeping my eye on that. But definitely could be concerns about inflation. Absolutely. Yeah.
Overall, though, like you said, we really benefited as a society from lowering interest rates because it's now easier for us to borrow cash and then do things like buy homes or cars. So
Exactly.
the reverse action of rising interest rates could potentially mean the reverse benefit.
Exactly. And again, going back to why we started this podcast, it feels to me like everyone has made this huge bet that interest rates are either going to keep going down or at least stay low. And, you know, be careful betting too much on that. And maybe we're now at that moment where things are starting to change. So yeah,
Okay,
absolutely could have significant ramifications.
so let's talk a little bit about Bitcoin and why it's been rallying up. So from what my research is, a lot of institutional investors have begun investing their money in Bitcoin, perhaps because they are also taking, precautionary actions for bad economic times and a weakening dollar. And they're saying, hey, I want to change some of my currency from a dollar to another currency. And traditionally, that currency has been gold. But this time, institutions are saying, I actually want to change my currency into Bitcoin. because Bitcoin has a finite amount of Bitcoins that are available and potentially can be used as something to pay with, and so they want to change that. So what they're doing is they're buying huge amounts of Bitcoins and they're holding on to that, which reduces the amount of Bitcoins available in the market and overall is raising the prices of each Bitcoin. So Bitcoin has rallied tremendously in 2020, and we can see in 2021, after the outcomes of the election, it's continuing to rally. What do you think? How should investors think about Bitcoin? Should how aggressively should they get involved in it? How should they compare that asset compared to gold?
Yeah, so this is a really, really good question because Bitcoin, as we've kind of talked about, people are so focused on stocks and bonds, and they need to look at least a portion of their portfolio and something else. We've emphasized gold, but I think big picture that Bitcoin also can kind of take a similar role as gold. And a lot of people, people that are into Bitcoin, you know, think that everyone else is doesn't know or doesn't understand Bitcoin, and vice versa. People who aren't in Bitcoin feel, well, it's just a stupid asset. But I've kind of been in between that. I followed Bitcoin. I remember reading my first article on Bitcoin when it was 7 cents. It had gone from 8% of 1 cent to 7 cents, and so I something I followed literally for 10 years. I also saw when it shot up to $1,000 back in 2013, and then it crashed to $200. I remember telling my investment class, this is an asset you've got to watch. And I remember even I said, I bet you know, there's going to be students in this class that will own Bitcoin. And of course, they all laughed. Like they thought that was the most ridiculous suggestion that someone could possibly make, that they would own this Bitcoin because, they didn't really know about it. And how could I possibly own this kind of crazy asset? And as it turned out, I had not necessarily that class, but I think the next year's class, I had students calling me in 2017 when Bitcoin had shot up to 20,000. And they were telling me, oh, I'm looking at buying Bitcoin. I want to get into this. It was a complete U-turn in late 2017. And as in the class you were in 2018, I try to show people this is what a bubble looks like. When not everyone, but so many people are just like, this thing's going to $1 million. You've got to be in it. And there was all these other, ICOs, initial coin offerings, where just anyone random would say, hey, we're going to issue the Raphael coin, and people would just go berserk and buy it, and all of a sudden you'd get a few $1,000,000 because you sold off this coin that was worthless. So that's what a bubble looks like, back in 2017 when it hit 20,000, and then it crashed to about 3,000, as you noticed, or as you noted. So it's something that I've followed a lot, but as you pointed out, what has changed in this kind of last, really, it's kind of been slowly moving, but really in this last year is you've seen a lot of institutional investors say, oh, pension plans, in particular, that are saying, hey, I want an investment in this. I'm worried about currency debasement. I'm worried about inflation. I want to put some money in Bitcoin. So that's really driven up demand. And Bitcoin is like, it's had these little series of bubbles, little bubble, medium bubble, bigger bubble. And to me, it feels like we're in the early stages of a huge, a huge bubble. And Bitcoin is something that, similar to gold, you can't determine a perfect value of it, right? It's not like a bond that has very set interest uh, payments, and you can figure out pretty much precisely what its value should be.
It
So
also
they
has
could really
it also
go ahead.
has a promise from someone else
Yes,
to pay you.
yes,
Continue.
that's right. Yeah. So so the idea with gold is it's something you can hold. You have it. You're not relying on anyone to pay you any money. Bitcoin is kind of taking a similar role. It's just rather than it exists in a physical form, it exists kind of in this decentralized way in the, you know, uh, I don't know, in just distributed network across the world. Is there's a recording basically that says you own this amount of Bitcoin, and it's, because it takes so much effort to show that you own it, that it's just a way that you can own this asset that's yours. You don't have to worry about someone paying you. It's something that you own outright. So there's a lot of similarities there. Where I start to see some differences and where I have some concerns. To me, I think Bitcoin definitely, it has a place in a portfolio, and because it's incredibly volatile, like maybe, more volatile than gold. Gold is already extremely volatile. Bitcoin is, another factor of 10 on top of that, you could just own 2 or 3% of it. And yeah, if Bitcoin goes from 40,000 to 1 million, you're going to be really happy in your portfolio. And if it goes to zero, no big deal. I've lost 2% of my portfolio. So it definitely has that same kind of asymmetric payoff that allows you to have a little bit in your portfolio and really diversify. The concerns that I have with Bitcoin versus gold is, first of all, gold has a long history. We've seen multiple time periods, the 1930s, the 1970s, go back thousands of years before that, that gold has kind of shined, pun intended, during difficult economic times or different, eras of unusual financial situations. So it has a good history that it's done its job when it's needed most. Okay, whereas Bitcoin, it has a much shorter history. So that's kind of one small negative, I think, against Bitcoin. The second thing is, gold is like, it's anti-technology, it's anti-finance. It's very different from a lot of other assets that people own. So that's what gives it some significant diversification benefits. Whereas Bitcoin, yeah, it's kind of anti-finance to some extent, but it's very technology based. And I'm not an expert enough to say the technology of Bitcoin is so amazing that nothing will change in the future, or no technological advance will happen in the future that will change its value. So that's adds some more uncertainty to me to Bitcoin. Maybe something comes along that's better. Facebook has worked on a currency called Libra. And, imagine that, where, what is it? 2.5 billion people are on Facebook, and they have some sort of currency that, your friend or your business that you're dealing with, you just push a button on your Facebook page and you pay them. Maybe there's a currency like Libra that comes along that will just dethrone Bitcoin, and people will, 20 years from now, people will look at Bitcoin like they look at a flip phone now, right? Like, oh my God, you use a flip phone, you're a relic, so there's some technology risk with Bitcoin. There's also some legal risk. When I looked at Bitcoin 5-6 years ago, everything I looked at was, hey, there's some concerns here that governments feel Bitcoin is used for money laundering. Um, so that's one risk. What do you really own? Like, is there enough legal structure to say that, hey, my broker went bankrupt? Do I actually own that Bitcoin, or is that somehow disappear? Is there cyber risk where I own Bitcoin and someone's broken into my wallet and stolen it? So these are issues, and I think people with more expertise in cryptocurrencies could answer those better. So I'm not dismissing Bitcoin at all. I'm looking at Bitcoin as definitely something that people could have in their portfolio for diversification purposes. And I think, from my own experience with Bitcoin and my own experience with other bubbles and other assets that are hard to value and that are scarce and how much they can go up in value, I think Bitcoin could definitely be 100,000, 200,000 a million in the future, but there's some added risk there um, that I see that aren't there with gold. I feel like gold, um, it again has that long history. And one additional thing that we've talked about in this podcast is gold mining stocks. And I think that's an area where I'm also seeing institutional investors say, hmm, I want to own assets that are different from normal stocks and bonds. And maybe I don't have the capacity to own gold, but I have the capacity to own gold stocks. And I think you're going to start to see more and more institutional investors go after gold mining stocks. And I think, again, there's, enormous volatility, and probably for this year as well, I expect enormous volatility in gold mining stocks. But I think there has potential for huge gains and as a way to really diversify your portfolio. So I feel Bitcoin, gold mining stocks, gold are all ways that you can get that diversification away from typical stocks, typical bonds.
Cool. Awesome. So I think that pretty much covers everything we kind of listed about chatting about today. Is there anything else that you'd like to add about the subject?
Yeah, I think maybe that, I think as far as kind of, our main topic of gold, I still see, as I mentioned, there's still some potential for volatility. My kind of feeling that I get from talking to traders and seeing what they're doing, there's still people that have a lot of leverage. They've kind of taken this view, well, the Democrats have won. There's no doubt we're going to have huge amounts of stimulus. There's no doubt gold's going to go up. And I think that's the right long-term view. But if people take too much leverage, as we've talked about in other videos, it creates some fragility that one little kind of bad news event or something, or someone's forced to sell because they're leveraged, it starts an avalanche. And so I still put a, you know, 30, 40, 50% chance that we're going to have an avalanche at some point in the next, say, 3 to 6 months. And that's when I would get more aggressive, super aggressive in gold. Um, but I think long term, things still our outlook for gold long term is still the same. I think there's still a lot of benefits there. But I think what's maybe crucial is if interest rates are starting to rise, that it's time to really think about diversification. And the other asset we haven't talked about is having some cash. So if you do get that avalanche or you get some sort of crazy market event like we saw in March, you're ready to take advantage of that. So I think now is the time to really consider diversification, talk to your financial advisor about it, and think about putting that 10, 15, 20% of your portfolio in something outside of stocks and bonds. I think the time is now to really think about that. Yeah.
A couple of questions. Since that podcast we did where we discussed a little bit about high leverage and how you're seeing people really getting leverage about gold, where if there's any negative bad news or anything that could cause a forced sell for one of the positions, it could start that avalanche. Did you notice any big drops in the price of gold since that podcast?
Yeah, so we actually kind of talked about this in a couple of podcasts. You remember just before, I think it was just after the election in early November, it was like gold had shot up. And I said, okay, let's not get too excited because I've seen a lot of leverage. And what you actually saw is over the next 4 weeks, gold dropped $200. And maybe that's it. Maybe that shook out enough of that leverage and we're ready. And, now we've bounced back, another $150 since then. So that might be enough. I still get that same sense that people have just got too overexcited. And so I still view that as a chance. Again, there's no guarantees. It's so hard to predict, all these forces, how they're going to play out. But I still, if people are listening to this video saying, yeah, I made my decision, I'm going to switch 20% of my portfolio into gold and gold mining stocks and a little bit in Bitcoin, just be ready for a possibility of a significant pullback. You might want to maybe just go halfway and then consider over the next year or two gradually adding in And if you get that big pullback, uh, then go for it. I think that's maybe a better approach right now than saying now's the time I'm going to make that huge shift all at once. Consider doing that over time, or considering getting some cash now and gradually putting that into other assets.
A lot of the things we've talked about gold really do relate to a lot of other asset classes, excuse me, including Bitcoin. Um, in Bitcoin, we can also potentially see a drop, a significant drop after the huge rally we just witnessed. And another item that you can also use towards Bitcoin is if you are interested in buying Bitcoin, don't go all in right away. As we spoke about gold, if you are interested, you can go in gradually. Every time you see a drop, you can get in. In terms of Bitcoin, is this a good time to go in? I mean, over the past month or 2 months, after it rallied quite hard, if you said, "Hey, is this a good time to go in?" and let's say, I would have said no, or you would have said no to someone else. No, this isn't a good time to go in because it could correct. Since then, it really rallied up again.
Yeah.
And so you really don't know what's going to go, if it's going to go up or if it's going to go down. And that's why it's really tough to say, hey, is this a good time to go in or is it not? Is it going to correct and then it's a better time, or am I going to miss out?
Yeah.
But today Bitcoin has reached $40,000. Is this a good time to go in?
Yeah. So this is always a great question, because it's like, no one has that perfect crystal ball. But you can start, with some history in markets, you start to get a sense. And, uh, you know, one thing that I am seeing, like I can look at, I'm looking just at the Bitwise 10 cryptocurrency index fund, and it's currently trading at just under $68. But I can look at its net asset value, which is if they just said, hey, we're just going to sell everything that we own today, what would it be worth? And their net asset value is only $34. So it's like, it's kind of like Bitcoin is trading at 40,000, and I came to you and said, you know what, I'm going to sell you some Bitcoin for 80,000. You'd be kind of like, well, wait a second, wait a second. I can buy it for 40, and you're telling me you'll only sell it to me at 80. What's going on? And it's really the fact that there's um, such urgency in how people are going after Bitcoin after it's risen, that they're willing to pay far too high a price for an investment in Bitcoin, because I can't buy in a Bitcoin exchange, but I can buy a mutual fund or an index fund on exchange. So that's what I'm going to do, but you're way overpaying for it. So it's a sign that there's maybe it's too much excitement to be buying Bitcoin aggressively at the moment. Um, but that doesn't mean it's going to crash right now. It just means that maybe you buy a little bit just to get started, and just like we had that video on taking advantage of volatility in gold, there's probably going to be some pullbacks. And look at the history. A 30% pullback or 20% pullback in Bitcoin is pretty much happens every month almost. So just say, hey, I'm going to buy on a 20% pullback. I'm going to buy on a 30 and 40% pullback, and then I'm good. That's kind of the approach you can take advantage of that volatility. And certainly, looking at a few statistics like that market price versus net asset value for the Bitwise 10 crypto fund tells you that there's pretty good probability you're going to have some sort of pullback in the next 3 to 6 months that you're going to be able to take advantage of. So yeah, I think buying a starting position to kind of just get your feet wet is not a bad thing at any time. But yeah, I think you're going to get some chances, and just be ready to take advantage of it if and when it happens.
Yeah. I like to remind people that when you are interested in buying anything, it's always right away a good idea to also have a selling strategy. It doesn't have to be a quick selling strategy, but just remember to keep that in mind when you are interested in buying Bitcoin or anything related to cryptocurrency.
Sure.
And just another highlight on the fact that we see huge volatility in Bitcoin, and we're seeing a huge rally in Bitcoin. It's rising up very quickly. Don't forget that Bitcoin is a pretty risky asset. So if you are interested in getting into it, don't put too much of your money into that part of your portfolio.
Yeah, exactly. That's good advice. That it can, again, it's the type of asset you can just have a small amount and it can really help. And if it doesn't work out, it's not going to hurt you very much. So yeah, good advice.
Perfect. Anything else, Steve?
No, I think that's good. Very, very interesting start to 2021.
Absolutely. I wish everybody a happy new year for 2021, and I'm looking forward to our next podcast.
Great. See ya.
Okay, bye.